Hello, traders. It's 8:02 a.m. Chicago time. Good morning if you're still in the morning, afternoon, or evening, wherever you are. Thanks for joining. This is episode number 1734. Derivatives trading is not suitable for all investors. Past performance not necessarily indicative of future results. This morning, the market is showing risk-off sentiment. We're seeing the bonds rallying in the U.S. Two handles and eight ticks. The U.S. dollar rallying to over 100, up $1.13. The Bund is up 114 ticks, and the 10-year note is up 20 and a half ticks. The laggard today is the Russell, down almost 5%, 4.42%, close to limit there, down 54.7 points. The DAX is off 376 points, and the Euro stocks are down 100 points. The S&P is off 81 points, down 2.85%. Clearly risk off. Gold is off, trading at 1744 and 60 cents, down $24.30 or 1.36%. The news flow overnight, what's really driving this is that global equities have been down. The IMF warned that the worst global recession since the 1930s is occurring due to the coronavirus pandemic. And of course, oil is off. Oil had an impulsive move down yesterday and is challenging the 1927, I believe, the 1927 low in the May contract, and is really pushing through low territory, at least for the last whatever it is, 10 or 15 or 20 years. So that's where we stand. Um, I don't know, I know retail sales came in weak, and I know that the Germans have stated that the COVID cases have fallen for the sixth day in a row, while Spain hits a six-day high. There's still a lot of mixed data. There's a conference that's a virtual conference that's being set up among G20 finance ministers that where the discussion is expected to take place about what to do to jumpstart the economy. Um, and recessions are expected across the board. So German government set to extend lockdown restrictions till May 3rd. Canada, Ontario just extended its state of emergency another month for 4 weeks through mid-May. I'm still expecting, based on what I'm seeing and reading, I'm still expecting this to continue on through June. In the meantime, the the U.S. executive branch, POTUS, is talking about opening up the economy May 1st or before that. We'll see how that goes. People need to get back to work, but obviously not at the risk of more dying. But we'll see how that plays out. So just not the exactly a ray of sunshine in terms of news, and that's what things are. That's what the market is responding to after gapping up yesterday and running almost 2850 in the S&Ps. We're currently trading about 100 handles lower, and back into balance here. In terms of what was released overnight, again, retail sales came in at negative 8.7%, negative 8.7%. The market was already falling, and this just accelerated a little bit. Negative 8.7%. The expectation is negative 6.5%. So even the forecast, it was worse than the forecast. We do get the Bank of Canada rate decision at 10 a.m., expecting to hold steady. And then from there, we do get business inventories in the U.S. NAHB Housing Market Index. We get crude oil inventories at 10:30 Eastern, expecting a surplus of 11.676 million barrels. The prior surplus was 15 million. I believe these oil producers are running out of places to stick oil to store oil. So it'll be interesting to see what they do. But currently, oil's below $20, so we'll see how that works. Let's take a look at what was expected yesterday versus what we got yesterday. The primary expectation is a pullback, expecting it to drop down into the 2800, 2801 area and then pop higher into 3150 and hold steady. I have collapsed my range expectations. The VIX has dropped below 40. But and then the secondary was a push higher into about 2820 and then a drop back into the 2780 area. And then the third was an open test drive up that pushes us into 2850. Here's what the market actually did. Yesterday was an interesting animal. It did pretty much all three of those. It dipped down into the 2800. Here we got, scenario one was looking for a dip into 2800 and then a push into 30. So that's basically what worked out, but it did so early on as well. It was a little bit messy. We have a normal variation day. We have a profile that's somewhat P-shaped, showing some short covering. Yesterday was more of a gap and go situation. We left a gap beneath us here, which is outlined in the master levels for those who see it. You can see the gray box there for the gap, but currently we're trading down here. So we have kind of pushed through the gap overnight and are trading inside of Monday's range currently. So we left what looked like it would be a pretty bullish close. I was looking for at least a test 28.50 and a quarter overnight, and that didn't happen at all. The overnight session held 2 ticks below yesterday's high, and it's been selling since. So it's we're coming into a pretty bearish market. The volume yesterday was 1.32 million, which is fairly in line with what has been recent. You could see that we did 1.68, 1.25, and 1.32 yesterday. So overall, we have moved away from that 27.35 area, and it looks like we're moving back to it. That's a big magnet. We're still struggling with this 27.81 fib here, the mid of the entire sell-off. We're still kind of struggling and balancing and chopping around in this area, and that's where we stand. So that's how things look. You can see that we're working our way. The overnight low is just underneath the neckline or the low volume node, composite low volume node, and then we're back into this area that I've highlighted for the last week or so, the 27, 34, 35 area, and that's the way it looks. We're back to that magnet, and all we did was we squeezed out shorts yesterday. This totally was a short squeeze here. Squeezed out shorts yesterday, only for them to come in this morning and find themselves in the money, but out of the trade. So that's where we stand. Another interesting thing is we had a pretty strong close yesterday with negative volume on the SPX, which is kind of interesting. It usually leads to a day or two of losses following that. We'll see how that works out. That's just a historical probability there. In terms of what we've got in the overnight, here it is. We open and it's just a downdraft. It's just chop on the way down. Pretty much for the entire session, we had about a 20-point range, which is pretty tight for this, for the recent volatility. And then Europe opens right in here somewhere. And then from there, we just sell, and we have accelerated away from the mid and VWAP and have moved away from the point of control. We don't have balance at all overnight. The complete price discovery profile in the overnight session with multiple distributions. The market is seeking value and is not finding it still. So I expect this to continue, not seeing an excess low, seeing a weakish low, and therefore I expect this to continue on its merry way, on its path through the low from yesterday's overnight, which was right here, 52.50. That's the area we're testing now. We have a low of 54.50 currently. So I'm expecting this to continue lower, push into 27.35 next. That's the main expectation. Looking at the big picture, here's what we've got. Let me turn these off. Here's what we've got. I mean, we've had an all-time high at 82.50, 33, 82.50, a low of 21.79.50, a mid of 81, which is where we are currently. This is our current price right here. We've poked above. We've poked above and are pulling back to this area, and you can see that there's this prominent composite high volume node here. That's the 2734 area, and we're likely moving back in there. So we've been in this kind of uh, skewed balance. We've been back and forth in this area for quite some time. Here, let's take it from the gap up. And you can see that the balance, this balance zone, the point of control is at 2730. It's outlined right here, 2730, and that's pretty much in line with that 34 high volume node, and I expect that to be a magnet. So we're, you know, the recent movement since last Monday has been very exploratory in nature. We keep moving up, testing, moving up, testing, moving up, testing, and now we're pulling back, and we're likely to pull back to the 34, and we'll see what the next move is. It's hard to tell what that is. Here's what we've got on ctbookmap.pro. On the heat map, the market has traded out a lot of the high volume prices, or the big bids. See how it's traded through. These areas are pretty legitimate. You can see that this. Oh, hello. Hang on, it's delayed. This is this computer's fault, not the software. The software is actually pretty smooth. So you could see that this liquidity's been here for some time, and it just kind of pushes through here, here, here. All of this liquidity has front run price and has traded out a lot of it. The selling has been pretty relentless in this session. It has not taken a bounce. It hasn't taken like the classic collision bounce, consolidate, continue through, retest from below, continuation, the kind of movement that sets up some nice trades. It kind of plows through. And it's continuing to do that. Here's we just had our bounce from the low right here. Again, liquidity coming in. There's a lot of bids being hit, a lot of orders being filled on the way down. This is the first time we've had a nice, clean, clear bounce up, and now it's rolling over. But you can see that the liquidity in the overnight session has really traded out well, and there's more below 2752, 2750, and my expectation is liquidity. There it is, 45. And then 35, the 35 area is expected to have liquidity. There it is, 35. These are the key areas, and you can see the liquidity below is much higher than the liquidity above. This is a pretty clear landscape up above, except for the 2780. That's where the order flow is. This has been here a long time. Okay, this has been here a couple of sessions. So that's where we stand in terms of the order flow. I want to remind everyone that today at 4:30 Eastern, we're going to have Jeff Snyder on of Alhambra Investment Partners, who will talk about the repo markets and their impact. I posted a chart yesterday. About the repo markets and how active they've been. The correlation between the movement in the repo market and here it is. You could see that this action from the Fed in the repo market started in mid-September, and if you look at the SPX or the S&P, you'll find that we moved up this massive rally correlated with the action in the repo market, and that's why we're having him on. It's to explain to us what the heck a repo market is and to just answer questions. His slide deck reads like a a crash course in macroeconomics. I think it'll be very interesting, especially for traders who are very confined to the short time frame. I think attending this is very important. The URL to register is go to ct.pro. I'm going to type it in here. Go to ct.pro/repos. I think there are about only 150 or so spots left. We have almost 1,000 registrants currently. I suggest you register now. Even if you can't attend, you should register, and then you'll get an email with the recording. I think this is worth watching because the action in the repo market has been pretty aggressive for the last 2 quarters or so. Let's move on to what's expected for today. What's expected for today? Here we go. So, what are we looking at for today? Today, given where we are falling back into this, let's draw it out, into this balance, basically. We have a neckline up here. We have a neckline down here, which is where that stock zone is, which was where we are currently. And we are currently sitting right here. The expectation is for an open auction that responds back towards the high volume node at 2780. Expecting its consolidation here. I'm expecting it to roll over and to extend the low down into the 2730. That's the bigger MC point of control and a naked point of control and the high volume node right here. That's scenario one. I'm expecting it to be responsive up, maybe to the gap mid or something. And I'm looking for a continuation lower. The secondary scenario is an open that immediately drops lower, pushes, grinds its way down, pushes into this 27, 34, and 30 area, consolidates, and then bounces back up and starts moving above the composite low volume node at 27, at the 2755 area, and then finishes relatively strong. We end up with an open gap. The tertiary, because we're opening in a gap, the third scenario is likely to be an open test down and drive up, which will likely consolidate at the 2780 area and then move into 2800. That's the third scenario for today. So if we see that it's a weak test lower, open test drive, consolidate at this 80, and then push into 2800 and start squeezing into the prior day's range. This is the bullish scenario right here. So those are the 3 key pieces. And of course, our job then is to take a look. Our job is to take a look and see which way the market responds and to place ourselves in a position to take advantage of these areas. This area that we're in right here, the 2734, 2730, and then below there, you have the 2720 area. It's key. That's key. Above 2780, 2800 are key. So those are the big response areas, the key areas that we're likely to see some action in this morning. Okay. Good luck, and I'll catch you this afternoon at 4:30 Eastern with Jeff Snyder. Please join us. Take care.